How to calculate break-even sales? This could be a challenging area for many who are coming from non-finance background. So in this video, I will show you an example so you can understand it easily and it will become very simple for you to calculate this break-even sales. Why do we find break-even sales? It is basically to know which level of sales recover all your cost. It means at break-even sale, your sales will be equal to cost. So there will be no profit, no loss. If I put it in the diagrammatic form, look at here, this is your unit sold and here I am just capturing the revenue and cost. When you sell 0 unit, your revenue is also 0. When the unit sold increases, your revenue is also increasing. But when you are selling the 0 unit also, you still have some cost. So at 0 unit sale, you have a cost. It means in this region, even if you are going to make sale, the cost will be greater than that. So this is the region of loss. And you will reach a point where your revenue and cost will intersect and beyond which your revenue will start exceeding the cost. And this is the region of making profit. So our idea is to find out at what point this revenue and cost intersect so the break-even sale is achieved. This is the theoretical understanding through a diagram. Let me take you through some numbers. Let's say your business is achieving 10 crore sales. But for this you have to incur some variable cost, right? Let's say the variable cost comprising raw material, variable labor cost and other variable expenses works out to 6 crore. So this will give you a profit of 4 crore using which you can manage other fixed cost. So this profit is contributing for recovering the fixed cost. We can call this profit as contribution. So from this we have to recover the fixed cost. Let's say fixed cost works out to 3 crore. It means after all this, business is left with a profit of 1 crore. If you ask me whether this 10 crore is break-even sale, answer is no, because at break-even sale there will be no profit, no loss. It means here it will be 0. So using this information, let's do a reverse calculation and find out the break-even sale. That is, I want my profit or loss to be 0 here, and already I know my fixed cost, and that fixed cost will remain fixed at break-even sales level also. So at this level also it is going to be 3 crore only. It means from contribution I have deducted fixed cost of 3 crore, so I landed in 0 profit loss. It means my contribution is also supposed to be 3 crore. Only when I make 3 crore contribution, I will recover fixed cost fully and I will land in this situation. Now the question is, what amount of sales will give me contribution of 3 crore? For that, a simple knowledge is sufficient. We know when sales is 10 crore, contribution is 4 crore. So find out the relationship between these two. That is 4 on 10, which works out to 40%. So the 40% of the sales only will give the contribution. It means this 3 crore is 40% of break-even sales. So simply we can take 3 crore divided by 40%, that is 0.40, we will get break-even sales. I'll put that here, 3 divided by 0.4 and that works out to 7.5 crore. It means break-even sales is 7.5 crore. If 7.5 crore is the sales and contribution is 3 crore, then variable cost is supposed to be the difference of these two, which is 4.5 crore. In this way, we can easily find out the break-even sales if we have present sales data. And look, this gives rise to the understanding that at break-even sale, contribution will be equal to fixed cost. So we can say at break-even sale, contribution will be equal to fixed cost. And this contribution is nothing but break-even sales multiplied by the relationship between the sales and contribution, which we calculated as 40%, right? That is, we calculated contribution by sales and that gave us 40%, and this relationship is called as PV ratio. So this understanding can be reduced down as a formula. That is, contribution is nothing but PV ratio multiplied by the break-even sales. So PV ratio multiplied by sales will be equal to fixed cost. Here our focus is break-even sales. So we can say break-even sales is fixed cost divided by PV ratio as well. And that's what we did here. We took fixed cost of 3 crore. We divided by PV ratio of 0.40 and that gave us break-even sale of 7.5 crore. And here we go, Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1 year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.